Hey everyone, this is Eric Bond, and I'm one of the co-founders of Hustle Fund. And welcome to today's session, which is called Real Founders Pitch a VC. Okay, so this is one of my favorite events. We actually did this exact same format back in July, and it ended up being one of our best attended sessions. We had 1,200 people signed up. So we knew that we had to go back to our awesome collaborator, NetSuite, to put together today's event. And let me tell you why I love this event so much. It's because venture capital today is a black box. So I want you to imagine potentially a pitch that you went through with a venture capitalist, if some of you have had the unfortunate experience of doing that recently. And you might have been speaking to a guy who looks a lot like myself, maybe with a better haircut, wearing a Patagonia vest, and then during the pitch, you're going through it, and, arms might have been folded. There's probably this vague smile on his face, like he's pretending to listen, and then maybe this like weird kind of like shaking of the head here kind of thing going on. And, or even more accurately is this. It's just like, oh yeah, okay, Elizabeth. On the phone. And you finish up the pitch. The guy claps his hands, says, "Let me know how I can help." And you never hear from this guy ever again, right? It's like mind-boggling how, this sounds like a joke, but like, a less extreme version of that is unfortunately very common, because venture capital is this odd black box where transparency is something that is not very common in trying to understand the true feelings, the true feedback, the true biases behind what they're hearing. So what we're going to be doing today is we're going to shatter this black box with a velvet hammer. And by the way, that's my nickname for Elizabeth Yin, my co-founder. And we're going to speak to three great founders who are going to go through their pitches. I'm so excited to introduce them in a moment. And me and Elizabeth live are going to critique their pitch and provide some constructive feedback. And hopefully through this non-BS session, not only can the founders benefit from this feedback, but you can as well, and apply this to your own pitch by getting into our heads. So let me do this. I'm going to go ahead and share my screen so I can introduce what this session is going to look like. So here's the agenda for today. We're going to quickly introduce ourselves, me and Elizabeth, and then we're going to next go into the three pitches. The way that this format works is 5 minutes for each founder. We have three founders, 5 minutes for each of them to go through their pitch, 5 minutes for me and Elizabeth to provide our non-BS feedback on what we've been hearing, constructive feedback, and then finally 5 minutes of open Q&A from our audience. So this is a platform that you might have heard of called Zoom. Right? It's a hot new thing in 2020. And if you've been a part of Zoom, you might have noticed that there's a Q&A section. So we have our awesome product manager and engineer, Mike, here, who's helping to produce today's event. And he's going to help us to cycle up some of the questions that he is seeing to us. It's going to be hard for us to monitor the chat. So if you have questions about things that you heard in the pitch or feedback that we shared for each of the founders, please put that in the Q&A, and we're going to do our best to answer as many questions as possible during that time. So we're going to lather, rinse, repeat, do this 3 times with 3 great founders, and then hopefully have about 10 minutes or so at the very end for a Q&A. So that is how it's going to work. And what we're going to do now is first recognize before the session begins that we do not do these webinars in isolation at Hustle Fund. We're really lucky because we've had an awesome ongoing relationship and sponsor at NetSuite. And I want to share just a little bit about what NetSuite's all about. So NetSuite gives early stage companies the confidence to tackle the fundraising process head on. Startups are equipped with real-time financial visibility, KPIs, workflows, dashboards, and reports for the daily strategic plan, and crucial to improving business performance and attracting investor interest. Not to mention, NetSuite's dedicated venture capital practice and extensive partner network provide a supportive infrastructure to help you manage everything from implementation to investor expectations so you can propel your business toward the ideal exit. NetSuite provides all of this on a single cloud-based platform so you can access mission critical data anywhere at any time, even during your next pitch. So to date, Hustle Fund has invested in over 180 companies across our first fund and second fund. And many of our founders are happy NetSuite clients. Check them out at netsuite.com. Thank you so much, team, for always being so supportive of us. Okay, so why don't we do this next? Let's introduce ourselves. Elizabeth, can you say hi? Or can you unmute yourself?
Hi, everyone.
Okay, that's enough. So let's keep going to talk about our founders. Like, let's reserve a lot of time to actually do this. So here are the three founders that are going to be pitching us today. We have Laura, Anatoly, and Hoda, and we're going to go in that order. Again, 5 minutes for the pitch, 5 minutes for feedback from me and Elizabeth, and finally 5 minutes of your questions that you can pump in through the Q&A sections on Zoom. So I'm going to get my timer ready. And Laura, are you on?
Yes, I'm ready.
Okay, you're ready to go? All right. So whenever you're ready, I'll start the timer, and I'll also control the slides for you. So please go ahead.
Thank you, Eric. Hello, my name is Laura Minkini, and I'm the founder of Mikey Guy, your longevity concierge. Next. Did you know if the boomer demographic was a country, it would represent the third largest economy in the world? Next. And yet, products for older demographic are rooted on reactive health rather than preventative wellness or lifestyle solutions. Next. Ageism cost North America's economy $850 billion in lost GDP. People over 50 represent over 70% of total consumer spending, and yet only 10% of marketing dollars are spent on the 50 plus demographic. Next. Our solution is a curated platform enhancing quality of life. Mikey Guy stands for My Ikigai, a Japanese concept encompassing sense of purpose. We believe purpose and longevity, increased healthy lifespan, are key to a better aging experience. Next. Our platform is a discovery and recommendation digital hub for the 50 plus demographic. We offer the curation of the best services, products, and experiences for an aging experience centers in preventative wellness. Next. Meet Ursula. She's 62, a divorcee, lives in Los Angeles. She's not lonely or dying of dementia. What she wants right now is care for her mother, figuring out what to do next, and reverse mortgage options. After creating her profile, Mikey Guy's platform will provide her customized recommendations according to her budget, geolocation, past selections of latest companies. Next. We act as a hyper-targeted customer acquisition channel. Our vision is for an API integration with our partners to simplify access to our members, to our recommendations. Next. We showcase our partners via a custom landing page and online experience with them, eventually offering a unique discount affiliate checkout as well as reports. Next. Our partners benefit from conversion at a lower CAC cost than their CAC, hyper-targeted demographic reach, and brand awareness. Our members benefit from partners' offers, discovering preventive health concepts and lifestyle brands, and from potentially increased lifespan. Next. There are 70 million boomers and 65 million Gen Xers over 50. How we calculated our totally addressable markets was by considering 75% of the boomer population are under 74, 50% of this demographic is online, and 10% of total goods paid digitally are paid by this demographic. And these are all pre-COVID numbers. We took a 10% positive brokerage fee. Next. Revenue will be generated in a split brokerage fee and pay membership. Our goal is to get to 600,000 users to generate our projections of $45 million over 5 years. This is less than 1% of the total population. Membership will be $10 a month or $90 a year, with an annual spend calculated at $2,000 with 10% commission. Next. Launched in April, we are well on our way to 1,000 members, had paid commission on some experiences, and have established brand awareness. Have the support of Aging Tech Hub Aging 2.0, and were chosen to participate in the Coalition Conference, as well as have appeared in a number of Canadian publications. Next. Why we are the right team. Our team has the key competencies in brand and consumer experiences, growth, operations, with companies like Apple, Deloitte, and Louis Vuitton. Myself, I launched the first fashion tech accessories brand in Europe, becoming an Apple third-party vendor within a year. Next. Legacy member clubs like ARP, where members are called seniors, are widely perceived for much older adults. This is why we're building a fully digital consumer-facing hyper-targeted channel pre-ARP to help increase the longevity of the 50-plus demographic. We envision being recognized as a hub for positive aging experience with opportunities to build other verticals, creating our own products, and a superior aging experience. Next. We're currently raising a pre-seed round to build out the rest of our platform and key hires. Next. Thank you, and I hope you join us early on your journey to longevity. This is Mikey Guy, and you can email me at hello@mikeygui.com or follow us on our socials at Mikey Guy. Thank you.
Fantastic. Clap, clap, clap. Nice work, Laura. Let's send some love to her on the chat. That was very well done. And I'm calculating under 5 minutes. Very, very good. So let's go ahead and share some feedback. And I'm going to turn it over to my Velvet Hammer co-founder, Elizabeth Yin, if you want to start off with some initial comments and feedback.
Yeah, thank you, Laura. I think overall it was quite good. I think that digging in here and just in general, I personally really gravitate towards understanding the problem, because I think like making the problem crystal clear then affects everything else in the deck. And I also feel like, just as a generalization, startups don't spend enough time in crystallizing the problem. In this case, I think I was a bit confused about the problem because there were many different aspects here. I think in the beginning, I had written down you're targeting boomers, and you talked about health and wellness. And then later on, when we followed the case study, she needed some sort of wealth management or financial something or other, which I may have slightly missed. So it sounds like actually this is a membership program for boomers, and it encompasses all of their life, but isn't tied specifically to health per se. I think that's where there was a disconnect for me. So I think that's my number one piece of feedback. I have a couple of others, but I'm going to pause there because I think that was the thing that stood out the most.
Really quick comments from me too. This is a little bit more tactical, which is that at the pre-seed, especially the earlier that you go, my belief is that so much of the investment decision, almost 70% of it up to, is actually on your assessment of the quality of the founders, because it's so early, right? Like the traction is early, the product's still quite early too. So as a general rule of thumb, I'm a big fan of cycling up the team story much earlier, possibly even slide 1, because you guys have some really credible experiences and backgrounds to make the case that you're builders, marketers, and so forth. So I noticed as towards the end of the slide, I love seeing it at the beginning. And this actually is the second part of this feedback is a little bit more oriented towards hustle fund, I want to say, but our bias is always around customer acquisition and distribution. And you started to actually talk about it, how Mikey Guy can be a great distribution channel for your partners, which I'm completely bought in. But the question that I wanted to dig into further was, how does Mikey Guy actually acquire its own members itself? Like, what kinds of channels are you starting to experiment with? Do you have any data in terms of like initial cost per acquisition and so forth? So I think likely you do actually have some of this data. And that's something that I think is good to include potentially as part of this pitch too.
Should I answer or no?
Sure, you can react to anything that me and Elizabeth said as well. Yeah.
Oh no, we do have the data and we do have that slide. I just figured because I can tell you that it's not focused on spending money on Google or Google Ads or Instagram, which I do believe is the joke in Silicon Valley, that a lot of the money goes back to those companies once you do the marketing. It is very labor intensive and it's very human intensive because it's been word of mouth how we acquire 1,000 users. In terms of the really connecting with those 100 super users that are or evangelists and say, we love this product. They bring on other people, they do their experiences, and that's what we're focusing on, and really creating that base of people that love the product. And we do have this slide, but I should have included it.
I want to build on this point. So in general, I would say any sort of word of mouth answer is a bit of a red flag for VCs, because when you think about it, you have no control over word of mouth. Like people either talk about you or they don't. VCs want to know how you will manufacture growth, and even if it's not through ads. So for example, if you have a referral program or you are thinking about a referral program, it doesn't mean you have to have it right now, but people want to know what you have thought about. And so you could say, we have really engaged users, they love telling their friends, and on average, one person tells 1.5 people or whatever it is, and we're going to be implementing a referral program that does A, B, and C or whatever. That would be something. But just saying, oh yeah, people told their friends, that doesn't actually sound good to a VC. Along these lines, I think other things, and I actually personally don't care about market, but many VCs do. I did notice on your slide, the inner circle, and I don't even know what that inner circle represented, but it said 45 million. And I think if you have numbers about market sizes, just for everybody in this room, don't put anything in the millions. People will automatically discount your market size anyway. So I think you should be framing it as a very large market, like in the billions. That's just a weird tactical thing.
And just a comment on the market. This is where it's interesting. Even within the same fund, different partners can actually care about different things, because I do actually like to see market. And it's not to say that at this early stage, I'm going to hold you to it of like, oh, Laura, you're off by like $200 million, whatever. It's more around like the exercise of just like how you actually map out like the opportunity as being something that is venture backable. And just hovering on this for a second here, this is actually where the initial conflict of interest begins with founders and VCs, is that the definition of a venture backable firm, if I'm going to be like very selfish, is one that can essentially return our investment to our investors. So if we raise, let's say, a $50 million fund, is investing in Laura's company going to be the one that's the hitter that can return back $50 million of investment to Hustle Fund or even more? And the market exercise is actually one of those litmus tests to sort of see like whether it's on the right track. We can go into this quite a bit, actually. This is a huge topic for me. But I think before we do that, let's see if there is some questions from the audience. We have just a few minutes here.
Can I ask something? Just as
yeah,
a
please, Laura, let's do that.
Just to learn more, because it's a $3.6 trillion consumer market, the baby boomer market. But my understanding was that you have to really narrow it down because you can't go for the entire pie and really segment it. So I wanted to clarify that, because 18 billion is the totally addressable market. And then we really narrowed it down even more to what we think we can achieve as a minimum. Should we put the 18 billion instead to really like make that it's a connection of the figures? Or
I loved how you did this bottoms up. That was 100% the right way to do it. But let's just even take a rough exercise. There are 300 million people, a little bit more than that, in the US. And let's just say 50 million of those people are roughly in your demographic, that age. A sixth of the population is roughly that age. And you are charging $100 a year subscription or whatever. So, well, I guess it's only 500 million. If you charge $200 a year, whatever, that gets you to like $1 billion market plus whatever add-ons may be part of that. So that's what I'm talking about.
Okay.
You could potentially sell to 50 to 100 million people, right? I would guess, like, who are kind of in this age range, especially since I also noticed, and kind of going back to the problem clarification, like your definition of an older person kind of stretches down a bit. I mean, it sounds like you could potentially be taking people anywhere from, I don't know, 50 to 100, which is a lot of people.
Well, we're talking about middle age in the sense that it's not necessarily boomer, because boomers define 56 and over. But we're thinking that your longevity journey starts, I'm 42, and to me, it's already started now. I need to take care of myself now.
So actually, great. Then that's probably like closer to half the population. So I guess what I'm saying is you can be a little bit loose about that. Obviously not all of these people are going to buy, but just potentially these people could and do have these needs.
That's right. I think this concept's really cool, by the way. And I know we're getting close to time, but Mike, is there like one question maybe we can cycle, and perhaps there'll be some time at the very end as well?
Sure. A few people wanted to know, would VCs be likely to question whether an older audience is going to be comfortable with online subscription pricing?
That's a really interesting question. So first of all, I'll call out that there is serious ageism bias
Mhm.
just in society, right? But what Laura did pretty well in this is actually make the case that, look, even if that's the case, you can't deny the fact that it's an enormous market. And actually also like boomers are correlated to being kind of wealthy just because of compound interest over time, right? So there are actually a lot of VCs who are looking at older populations as like a big market. In fact, one firm that I really like is run by this awesome manager, Abby Levy, is called Primetime VC. And they only focus on boomer oriented startups. And I think it's so smart. So some are going to be turned off because, it just is maybe a market that they don't focus on. But I think there are plenty and increasingly a lot more VCs who are coming on who see the opportunity just the way that you do, Laura. Well, I'll let you have the last word on that, actually, Laura. Really great job before we move on to
Thank
the next
you.
person.
I mean, what you said about ageism is key because I put it in the third slide. 70% of the wealth of the Western world is in the hands of people over 50. They have a lot of money. They're looking for experiences. They don't relate to aging, as we've spoken about it. And I believe there's a lot of, I call it, they say the great tsunami, I call it El Dorado or the silver futures. So I hope to be part of this future and changing the way we look at aging, because with the one thing that happens to all of us, if we're lucky, is we get older.
That's really well said.
Thank you so much for this opportunity. I did learn a lot in what you said about not using the word of mouth and really defining the market. So thanks.
Thank you, Laura. Great job. Let's send some love to Laura on the chat if you have a moment. And let me go ahead and share my screen one more time. Anatoly, are you there? Are you ready to share your pitch with us?
Yes. Hello, hello. Can you hear me?
Yes, we can hear you just fine. We are excited to hear what you have to offer with Pact. So actually, let me get my timer back on again.
That's right.
And whenever you're ready, I'll do the slides for you as well. Go ahead.
Okay, great. Thank you. Hi, my name is Anatoly, and today we'll be speaking about agreements that you enter in online. Next. Let's think of Ben, this industrious entrepreneur who was, is, and always will be busy managing his contracts, agreements with his counterparties, negotiating stuff back and forth. And back in the day, he used a quill and a wax seal to stamp his deals. Today, he's using a bunch of scattered tools like e-signatures and scanners, and probably tomorrow he'd be using a different kind of platform. Next. What current solution providers fail to understand is that the agreement is a process and they offer just a piece of a puzzle. Let's say just a signature, or they would sell you a template of a document or open the window to exchange information back and forth. Next. Because of that, Ben has settled for a weak process. He might not get paid, miss deadlines, and expose himself to unnecessary legal risks. Next. This problem was quantified by Goldman Sachs and is equivalent to 5% of the annual revenue, and that doesn't include negotiation expenditure. Next. So if an agreement is a process, it needs a platform, and specifically with digitalization and COVID and a constant push for efficiency, this is a highly demanded solution right now. Next. That's why we're building Pact, the agreement platform. We've redefined them with a combination of a professional chat and a set of tools which help along the deal-making process. Next. We have a demo MVP, and our limited access beta is 2 to 3 months from being live. We have a bunch of interesting things inside, like bank-powered digital ID, intuitive contract creation and negotiation flows inside, in-chat signatures, and future connections with payment providers to then cover your contract that you have entered in. Next. One may ask, well, how are you different from DocuSign? Well, in our case, the chat is the glue that connects all of the tools together. Just think of the flexibility. With messages having legal power, now you could enter into an agreement by just chatting back and forth, or you could amend a contract on the go by just sending a note. Next. You also can download a signed document, or you could extract the full sequence of your communication with all the parties, all the documents, all of the metadata for your record retention purposes, or in case of a dispute. Next. We've also thought of smaller things like labels and flags and meetings inside of the app. And with future integrations with other service providers, we believe would create Pact being your business command center. Next. The ultimate value we offer is a faster agreement cycle. Being on the negotiation stage and on the closing, we cover most of it. And we've thought of smaller legal nuances that make the experience enforceable. Next. We are targeting small and medium-sized IT service providers as our early adopters, those who develop websites, applications, VR, AR experiences, because they have a bunch of NDAs, IP right transfers, master agreements, contracts, and a lot of project-basis communication. Moreover, they're tech-savvy enough to be using this. That's why they're perfect early adopters, and then would be scaling to other frequent deal makers, industry agnostic. And our idea is to target businesses who serve other businesses to launch the spiral of acquisition through case studies shared through organic and paid channels. Next. We've priced Pact at an amazing $10 per user per month for the base package, scaling from there based on the usage. Next. We have a brilliant team. We have a full stack technical developer who had previous startup experience. We have a licensed lawyer who is a legal tech enthusiast and expert. And we have a second-time founder who is a compliance expert as well. Next. We have a board of amazing advisors. We've graduated from the Founder Institute. Now we're part of the Legal Innovation Zone. We have early traction. 2 Canadian universities helped us with legal research back in the day. And now we're working on more and more partnerships with amazing service providers. Next. We've phased out the development of our product from an MVP to a scalable tool with users and much more to come, like legally binding chatbots, US denominated smart contracts, and much more to come. Next. In the end, our goal is to make the experience of entering into agreements enjoyable without compromising speed and legal security. Thank you, and strike deals with Pact.
All right. Anatoly, great job. 4 minutes, 38 seconds. Really, really well done. Let's send some love to Anatoly in the chat as well.
Thank you.
Again, I'm going to defer to my colleague Elizabeth with the first piece of feedback, please.
So second Canadian founder.
We love Canada.
Nice pitch. I think that overall it was good. I think echoing what I was saying earlier about problem, I have to say that for the beginning part, I was a bit confused, namely because I don't think I really understood the crux of it until the middle of the pitch. So I understood your argument that you're saying, oh, everything is very fragmented, etc. But I think the thought that went through my head is, frankly speaking, DocuSign actually does have a lot of the features you mentioned. Most people just don't use it. For example, if you wanted to use DocuSign for storage, you could, except most people are using Box or Google Drive or whatever. So people actually create their own fragmentation. But what was differentiated came later, which was around what if you need to annotate a contract? What if you want to chat with somebody about it, et cetera? It didn't like dawn on me that that was like a thing. So I would actually probably cut out the first several slides and kind of just jump to that, which is like, you know, hey, there's DocuSign and EchoSign and all these others. But the problem is, it's really hard to keep other things that are related together to the contract, which is the chatting, the amendments, the whatever. It's just that I think is the crux of this, rather than things like storage, or even I would question like bank identification. Like actually, if you were to really hone in on the value proposition of this, I think it is around the contract itself rather than the other things. So that's just my 2 cents on that. And that was probably the biggest part for me. I have other things, but I'll flip it back.
That's a great point. Thank you so much. And I would say that if I could jump in a little bit,
please,
that the value is in the eye of the beholder. And for some cases, the agreement concept is very broad. And you could have an agreement when you're buying a used boat or a used car, and you don't want to buy it from a crookster, and you would want to know their identity so that you could then make them liable for their statements made online, let's say on Craigslist. That's why this bank ID element jumps in to provide more security for deals where you're not trusting the other party. And then we've understood that because the agreement is a process, we've also embedded a very intuitive contract creation process with variables and stuff like that. And there's a bunch of tools now, and DocuSign indeed is working in that route, which are very kind of complex. And that's why no one is using them, and they're still using a piece of paper and a pen. And we're trying to make that very intuitive for the people. Thank you for your suggestions.
By the way, Anatoly, I just want to share that I highly recommend you take a look at the chat. There's some great additional feedback too from some talented founders. And also I want to call out Rick, who's also interested in using your product. So you've gained a client from today's session, I hope. It's very compelling. My favorite tweet of all time, because I'm a VC, I love Twitter, is from Justin Can, the founder of Twitch, co-founder of Twitch. And he said that first-time founders focus on product. Second-time founders focus on distribution. And me and Elizabeth, we're like, and Mike, we're like very cynical, like gritty, like ex-founders here at this point. And what we found is actually we find we ourselves to be really attracted as well to founders who are oriented towards distribution. So one of the things that I had as general feedback was, you had a really nice demo of all the workflows that you've put together, and they looked great. But I also think that you could have cut down most of it. So, I get the sense that like, okay, all I needed to confirm was that Anatoly seems to have really good product sense. Probably 2-3 workflows, the key workflows was enough. But I will always follow up with you about the distribution. There's some really great comments that's on the chat. We start to address these too in a moment about like, how are you going to convert someone from DocuSign over to this? Or, are you competing against red lines on Word documents and so forth? I always love to see what switching costs looks like, any kinds of acquisition channels that you think you're going to begin to test. And you did start to touch into this, but I kind of wish there's just more attention to that side of this pitch. And my take is that this could have been a 2-minute or possibly 3-minute pitch. And the shorter is always the better because people do not have any attention span. Let me pause there to see if you have any reactions before we open it up to a few questions.
A quick question. I had like an idea that I want to run through you, and maybe you would crush it with the hammer or approve of it. The idea we had is creating these ramps. So there's user behavior right now, and then there's the desired state, like our app, for example. And we're looking for the ramps of behavior changing, being available on multiple stages. For example, you have already entered into an agreement and you need to amend it real quick. That's why we'll say, hey, jump in here, attach the document, amend it real quick. Or for example, another case, we have a Chrome extension where you could quickly select the document from Pact and then shoot it to your Gmail, being another ramp for you to jump into the Pact. And then you understand that, oh, there's no point in kind of emailing it back and forth when there's 10 people and it becomes a mess. And then creating these ramps, basically changing the user behavior, providing with the small bits of value, and then enabling them to jump in and actually understand how big of a thing it is and then to use it for other cases.
Well, let me jump into this one. Elizabeth, you can follow up to please if you want. But like, I was sort of talking about distribution, and I thought actually you're going to talk to me about a distribution idea, but you're talking to me about more product. So I'd be very careful about this because clearly you're someone who has incredible passion and skill with building great products, right? And again, it's like really exciting to sort of talk about these things. But like when we're talking about customer acquisition, for me, it's just like, I've discovered that I can spend like $32 on Facebook to acquire a user that'll have a payback of 20 days and then an average order value per year of like $600, right? And here's the evidence of why we think this is repeatable and why CAC is going to go down on this. Like, you don't need to necessarily have all those details on the slides, maybe even an appendix slide. But getting to that kind of like thinking, and this is sort of like the test of you as a CEO too, just like, as like Anatoly is going to scale up, like at some point you're going to be done making product yourself. You strike me as someone that has like incredible product management skill and possibly engineering skill. There's going to be a time pretty soon where you do none of that anymore. And it's all about just the growth of this business. So just wanted to call that out. I don't know if Elizabeth, anything else?
But is it a 5-minute pitch conversation though? Isn't it for a longer kind of 15-minute, 20-minute? No, you should jump in.
I think it should be in the 5-minute pitch. And to Eric's point, I was looking at kind of the time and the number of slides. I would have cut out probably half of the product and condensed the problem slides to spend more time on customer acquisition. Because as a general point, actually for everybody, unless you're building a rocket or something, in most cases, the risk is not technical or product. In some sense, it's table stakes these days. Everyone will just assume you will be able to build this. But the question of how you're going to get this in customers at scale is top of mind for VCs. And even if you don't have all the answers, you need to illustrate in this pitch that you have at least thought about it. And one way to demonstrate that you've thought about it is to talk about it a lot. And I think tying into this, I was hoping for more specifics when you were talking about this. Like, even if you don't use ads, again, like, you know, if you have any data at all, even if it's small, it's like, with your beta users, on average, people send out X number of contracts, and we can see that Y number of people that they send to click on our link. And although we're in closed beta and people can't sign up, people are coming to the page, you know, to sort of suggest that there is some virality off of the contracts or whatever, if that's your path. If you're going to use paid acquisition, like, just very classic example for everybody is create a landing page and then, you know, shoot some ads towards getting people to sign up, and that will get you some benchmark data as well. So these are the kinds of tests people are looking for, even at the pre-seed level. You may not have the answers, this may not scale, but the fact that you've even thought about it and can articulate it will make you stand out from almost all of the pitches that at least we see.
I want to do this because we're getting kind of close to time, Anatoly. There's two questions that were that Mike was able to cycle up from us from some of the Q&A. Actually, one is a question for you and me, Elizabeth, which is, what do you think about how to dress on these Zoom meetings, right? Because Anatoly is clearly the best dressed here. I have a take, and I'd love to hear your take. So my take is that let's just cut the bullshit here. There's actually real sexism even on Zoom. Like, it's acceptable for me as a Asian man to be in my garage where there's literally a child's potty right there if I turned up the lights, and garbage bins over here, in my Hustle Fund t-shirt. Like, it's totally cool. Like, I basically rolled out of bed and I look this great, right? So I think that there's some flexibility, unfortunately, for men in particular. But for us at Hustle Fund, you know, one of the things that I just hope that founders are, regardless of their gender or identity, is just that they're comfortable, right? Like, for me, like, when we have this kind of relationship after the pitch, like, I don't expect you to like come in a tuxedo. You don't need to do that. I mean, like, I just want you to come as your comfortable self so we can just solve problems. And that's something that I'm very proud of, I think, with working with Elizabeth. But Elizabeth, do you want to sort of talk about that awkward question that I sort of posed to you?
I think that's absolutely right. I mean, I think the flip side then is, well, what if you're not a man? I frankly speaking think that there are different standards. When I pitched for my startup, I would definitely dress up. That being said, you want to, you know, given that you can only see half of somebody's clothes, you don't have to go crazy in this day and age, which actually is a great thing. So the important thing is to feel comfortable, and so that you can exude confidence, because that is the most important thing. And on Zoom, I would actually say it's even more important, because they're not there. You have to, I think somebody in the chat had mentioned, where's the energy or whatever, like, going above and beyond and being above and beyond excited and energetic is going to be really important to convey online.
So, general rule of thumb that I've learned in these things is to add 10% to everything. 10% higher voice when you're emphasizing something, 10% lower voice, you know, bigger smile than you'd otherwise do in real life. These are the things that I think like real actors do, I think, to convey like emotion on film. So there's something to learn there. Okay, let's take another really quick question, and then we have plenty of time. Hoda, don't worry for your pitch, and we're excited for that next. So where was it?
Another good question we had, Eric, is Anatoly compared their product to DocuSign coming out of the gate. Is that good to compare yourself to an incumbent, or should that be saved for later?
It's interesting. So in some ways, Anatoly, I really respect what you did. You kind of ripped the Band-Aid and be like, look, you're using DocuSign. I get it. You know,
I have a comment on that, because I've been through that quite a bit. First of all, there are more complex systems existing there, like contract lifecycle management, but generally the audience and even investors don't even know about that. So that's why we're kind of taking the most heard kind of thing, and then we're just addressing it straightforwardly. Beforehand, I had slides which had no competitor logos at all, and they had zero mentioning about, I was just talking about kind of product categories and competition categories that exist there. which created this kind of skepticism in people when they were trying to look through it, and they're like, but what about DocuSign? They're like, but what about like this? And but what about that? So if you address that, don't be afraid of putting that in. It actually wouldn't do any harm. Such a low, like early stage, it doesn't really matter. Like you wouldn't shift the attention of the audience to your competition that much if you have something to offer. So that's why we were recommended and advised to put in competition, address that real quick to kind of work with skepticism.
I think it is sensible, actually. Yeah.
Yeah, I think you absolutely need to put it in as competition. And given that DocuSign is a public company now, I think it's less of a problem. I think just in general, there's this feeling that a lot of companies that are publicly traded are a little bit older and stodgy. That may or may not be true, but I think that makes it easier for people to say, okay, maybe it's time for a new company. Versus if you're going after, a hot company that hasn't gone IPO yet. And I do realize DocuSign went IPO relatively recently, but I think somehow there's a perception. So I think that's totally fine.
Well, let's send some love to Anatoly on the chat. Great work. Thank you so much for all
guys. I appreciate
the great pitching and answering the questions. And let's now turn it over to Hoda. So Hoda, are you on the line? Can you hear me?
I am here. Do you hear me?
All right. Yes, perfectly fine. Let me go ahead and share the screen, and we've got plenty of time left. So whenever you're ready, I'll start the timer and you can begin.
Okay. Thanks so much for having me here. Everybody, I want to introduce you to StockCard. StockCard is a double-sided platform for retail stock market investors that connect those retail stock market investors to stock market influencers and content creators. So as we go to next slide, let me talk about 3 tectonic shifts that is shaping the landscape of retail stock market investing. Number 1 is that $30 trillion worth of investable assets are being transferred from baby boomers to the new generation. So these guys are inheriting this massive amount of wealth. And as you go to next slide, what's happening that this new generation, because they're used to this new generation of brokerage platforms, they have certain expectations from the tools that they're using in making their investment decisions and managing their wealth. They're basically expecting one-click, no-fee, intuitive experience when it comes to wealth management. And as we go to next slide, this same generation of retail investors, they also have access to these distribution platforms. With one click, they can create content about their stock market investments, publish it on YouTube, create a community on Discord, and monetize it on Patreon. So let's go to next slide. What a StockCard does is bringing these 2 sides of this new generation of investors together. So on the demand side, I guess, on the investing side, we're creating a platform that matches that one-click intuitive user experience when it comes to researching and gathering information and making decisions. And on the supply side, we're providing a place for this new generation of content creators to monetize their community, achieve a stable revenue, and actually own their own destiny around the community that they're creating. So let's dig a little bit deeper and understand how StockCard does that. So if you go to next slide, so we use the technology and intuitive and the principles of intuitive design to rebuild how a stock market information can be collected and automated and in an automatic way and visualized to users. Again, matching that intuitive one-click user experience that these new generation of investors expect. If we go to the next slide, for the guys that or the girls that are becoming influencers in this new market, we're giving them a hope. They publish and create a lot of content and have a lot of followers in multiple different platforms, but we bring all that together and they can use the StockCard as a place to generate money and generate revenue in a stable and consistent way. So let's go to the next slide. What is happening is that this 2 double-sided platform that we created has an inherent flywheel. the more users we bring to Stock Card, the more influencers would be interested to partner with a Stock Card. And the more influencers that partner the Stock Card, they embed a Stock Card's platform into their content and go and publish it to the world on YouTube and Discord and everywhere else. And that brings more users to Stock Card. And if you go to the next slide, you see how this flywheel actually works for us. So in the last 4 quarters, we grew our platform, our user by more than 8x. And we achieved that growth by an excellent cost of acquisition cost of only 60 cents. So the platform is growing, and that flywheel that I was telling you works very well for us. If you go to the next slide, not only we acquire these users to our platform in a very efficient way, we're also been able to grow our retention rate by 3 times in the last year or so. And our 30-day retention rate already surpassing the median of financial services industry benchmark. So even in our earliest stages, we acquire users efficiently at a low cost and we retain them very well. So let's go to the next slide. How do we make money? So we're already making money through a freemium subscription on our platform. And as we scale our platform, we're following a proven business model in financial industry. As we scale and get to know our users better and gather data, we're going to introduce targeted advertisements. And then again, as we scale and grow our platform, we're going to introduce performance marketing. We chose these business models because these are proven business models in our industry that make money already. And there's a lot of number of companies that have achieved success in using this business model. Let's go actually to a few slides, to the team slides, because I want to leave you with our team. We are a founding team that we call ourselves, we're a founding team with a skin in the game. And the reason we have a skin in the game of 2 things. First of all, we are all self-directed investors, also stock market influencers. We are and have been and will always be user number 1 on our platform. We deeply understand what's going on in the landscape, and we're building the platform using the deep understanding we have about the market. We're also self-funded, so we've self-funded the platform. That's why it's in the game. It's self-funded through our own investments in, I guess, in the stock market, or because we really, really believe in the future of this platform. So I think that's my time, but I'd love for all of you guys to go to stockcard.io and experience the power of a Stockcard platform. Thank you.
All right. Thank you so much, Hoda. Big claps there. Let's send some love on chat as well. A little bit long, 5 minutes and 44 seconds, but pretty good. I think you covered quite a bit. All right. My colleague, Velvet Hammer Elizabeth, how would you like to start this feedback?
Yeah, I think that's a good pitch. And I clearly understood the problem. I think my biggest questions are around tying the business model with the customer acquisition, or maybe those are not questions, but comments or feedback. Like freemium subscription, okay, understand that. It would be nice to get a sense of like how much we're talking about for a subscription. And I think then how that ties in. I think I was just kind of confused how it ties in with both sides. Are you I assume that the subscription is for the user side and you don't charge the creator side, and you had somehow mentioned they can make money, but that wasn't clear. I guess like just how all the money flow works is what I was looking for. And then I think stemming off of that, I think my biggest question is around how you're able to acquire both of these sides to kind of make it, make more money than what they cost you. And I understand there is inherent virality once you get it going, but that isn't there in the beginning. And in the beginning, marketplaces, if anything, are really hard to jumpstart because there is no audience. So creators are not interested. And then users, like, what are they getting if there are no creators? So that I think needs some explaining just in general for a marketplace.
Yeah.
So that's my biggest piece of feedback. More to come later.
Yeah. Should you let me just answer that, I guess, quickly, so that we cover that. So we charge users, the stock market investors, the one that come to our platform to use the platform to research their stock, and it's basically a $14.99 per month or $149 per year subscription. And we share a portion of that revenue with the influencers. So influencers, we don't charge them anything, right? They come to the platform, they become a partners of ours, and then when they go and create a YouTube video, or they're pushing video into their Discord channel, or whatever the other platform that they're using, they use a stock card to do their research and generate their content. And that they can do that because our platform is so easy and so well developed for their target audience, people who they listen to them, right? And what happens is that as they push and create this content and put it on YouTube or put it on Discord, they bring back traffic to us, and then we share a portion of the revenue with them. The reason it works very well is that they on YouTube and every other channel, they're already creating these content. They may make some advertising dollars, but what happens is that by just using a stock card and being a partner to our platform, there's an incremental, consistent revenue to what they're already doing anywhere else, right? They don't need to do anything extra at all. All they're doing is they're using a stock card and creating basically a homepage on a stock card for themselves, and then we basically share a portion of the revenue with them. That's how it works, right? So the flywheel is already gone, right? The flywheel is already fueling. We're not like in day one. We already have thousands and thousands of users of the platform, as you saw. So we tested it, and we see that actually works with a very low cost of acquiring users.
Thanks for that. I have sort of two pieces of feedback. One is, when you're talking about your team at the very end, I felt like you could hype up a pretty serious flex that you kind of casually dropped, which is like, how have we gotten this much traction to date with this? Well, it turns out we use our own platform, right? Like, we self-funded because we are successful influencers ourselves. That felt like the headline. Mm-hmm. It's just like, we haven't needed money to date because we are influencers and use our own platform. So like, this is why we've been able to bootstrap so long. You call it skin in the game. I would get a little bit more explicit of just like, this platform works. We are the manifestation of that. That's a really, really cool story. But so just want to call that out. That's like huge props. So the second thing though is, I'd like to actually reshare the screen one more time, because I want to understand your retention slide. Yeah. This is where I think VC to founder fit really matters. So I'm not an expert when it comes to these kinds of like public equities trading communities. So I actually was a little bit startled by this. The retention looked problematic, actually, but you're saying that's 3x better than industry average. Am I misinterpreting this slide? Can you walk me through like what's happening here?
So the retention, we grew our retention rate by 3x. We were at 10%. Now we are in the 30-day retention rate at 10%. Now we're at 30%. The median retention rate of the financial services industry is a little bit slightly lower than 30%. So we've already, in the first couple of quarters of our existence, we've already surpassed and been able to build our product in a way that we surpass that median of financial services industry. Does that make sense?
Yeah, it does. I think this aligned with what I thought was being explained here, but this feels like a pretty leaky bucket of just like, you're constantly doing new user acquisition. And this is actually one of the big problems that we see with a lot of marketplaces, businesses ourselves. Like we get really nervous about investing at Hustle Fund into these, because we just don't have a really good feel of like, how does this like flywheel continue where the rate of filling the bucket is faster than the rate of leakage. Mm-hmm. It might be entirely different in the financial services realm, which I think I have more ignorance around, but I wanted to call that out as like, ooh, like if I caught this slide, this would be really hard for me to digest without like really understanding this more from the industry perspective.
Oh yeah, so we use Big Spanel financial benchmark industry that they share every 2 years, I believe, a study about that. We always, we can share that information, which you obviously get into it. Yeah. The thing with the financial services industry you need to understand is just there's so many media out there. It's just basically website hopping. It's a real thing in financial services industry, because people hop between, like just things like bar hopping, because people want to get one piece of information here, one piece of information there, one piece of information there. That's why retention rate generally in financial services industry is not as high, because people have so many options. So when we were able, so you need to look at a stock card from how can we were able in a matter of 4 quarters from 10% 30-day retention rate to 30x retention. And then you come and look at our roadmap and see how many, based on the deep understanding that we're getting from users, how many more initiatives we have on our roadmap to even increase that 30x. So I would look at a retention rate from 2 weeks. One is a testament to the execution power of this team from 10% to 30%. Second is by only being self-funded and working on it ourselves, we were able to surpass average of industry. Think about when we have the funds available from a right VC with us, how much more we can do, and then kind of like surpass that website hopping experience that exists in financial services industry.
Yeah. Okay. Well, thank you for that. We have time for just one question, and let's try to take like 1 or 2 Q&A questions.
Can I throw in one mechanical?
Yeah, please, Elizabeth.
I did notice on the slide before the retention one, you have a cumulative graph. I think just the general point for everybody. Cumulative graphs are very much looked down upon because obviously your cumulative graph will always be better if you're adding up everything from before. People want to see what is, whatever it is, what is it for this month or next month, not what is it for this month plus all the other months, because that doesn't really say anything. So that would be my one mechanical piece of feedback on that.
Yeah, I mean, we monitor everything, and like, I can produce that slide for you in like 1 minute if you give me that time. Like, it's very like, yeah, absolutely, totally got it. Can I actually add one more to the retention? Because I shared the user retention at 30%, but I didn't share the influencer retention. The influencer retention by far, until now, is 100%. Like, we haven't lost any influencer because really we built a community that to jumpstart the market, which is the user side, and then now we have a little bit of a scale and a little bit of good following going on in our platform. Then influencers are seeing the power of a platform, so we're not losing influencers, and that's why we think the roadmap we created around that is going to keep building on top of that retention, because the influencers now seeing the value, going to create content, create their own followership, and they have a community that is very engaged. They bring their community to StockCard because they can make more money with that. That's why this flywheel is not only like growth flywheel, it's also engagement flywheel, because with the partnership we do with the influencers, we keep these guys in the community, in the platform.
Awesome. Well, actually, with that, we're going to leave that as the final comment for this section because we're running close on time. We do want to go to general Q&A. Huda, great job. Big claps for you. Send some love to her, please, on chat as well. And so we're really close to time, but maybe we can sneak in 1 or 2 questions just generally. If you have questions, comments for us, any pitches that you saw for the founders, would love to take those. Mike, it seems like we're still getting some feedback. I don't know if there's like a sort of a zeitgeist kind of question we can help answer.
I think there's one question that I've been seeing asked for every single one of these pitches today, which is competition. In your view as an investor, was it addressed sufficiently? Do you have any other tips for the people that just pitched or the audience about handling competition?
I'll throw in 2 quick 2 cents. I think that if there is a clear large competitor, so not other startups, in fact, I wouldn't even cite other startups, whether they're Series A startups or whatever. If there's a large competitor, then you definitely should, because otherwise people will wonder why you didn't. So such as DocuSign, as we discussed. But in the other 2, I don't think that there is a large competitor, or at least in my opinion, there isn't. And so it did not bother me that there was nothing on competition or very limited on competition. And I think that's perfectly fine.
I won't add anything to that. I think that's a great answer. And actually, I'm going to jump in and attempt to answer Madhav's question I see just popped in, which is, how do you go from a pitch like this to the next follow-up meeting? Great question. And this might be the last one that we can answer. So I kind of joked in the beginning about like that persona with the vest saying like, let me know I can help. And you never hear from them again. That's unfortunately like kind of real. So you have to take control of the follow-up and say like, hey, I'm done with my pitch. I want to understand 2 things. One is, what does your investment process look like? And then what do you see as the next step? And you got to really get specific of like, they can't just say, yeah, we'll follow up with you. It's like, well, what does that mean? Like, I'm going to reach out to you next week, right? And then we're going to have a follow-up meeting. Are you going to bring this to the investment committee? Do I talk to another partner? It's okay to hold the VC's feet to the fire. These are not rude questions. These are just like real process questions that you need to ask. Elizabeth, what have you done in your career that you think worked really well?
Yeah, so to your point, I messed up a whole bunch of my investor meetings with my company in the beginning because it's just like, yeah, we'll follow up with you. They don't. And when they say, yeah, we'll follow up with you next week, they don't. And so I think it's really like, okay, I just really want to understand very concretely here. Like, what do you think is the next step? If it's like, well, I need to talk to my partners about it. Okay, great. Like, should we follow up on Tuesday and discuss like what is the next step then? Okay, like get dates, get specifics, who is involved in the next meeting. Ideally, even schedule the next meeting in that meeting if you can. Like if they say we want another meeting, schedule it right then and there.
All right. And with that, awesome feedback. Again, a huge thank you. Please give some claps to Laura, Anatoly, Hoda for their awesome pitches today. We're going to also provide another shout out to NetSuite for sponsoring today's session. They're going to help us underwrite the production and the remastering of all the recordings, which we will share with you as soon as we have it. Everyone out there, all the hustlers who are listening today, thank you so much for spending time to join us here, this feedback. And hopefully there's some constructive areas and items that you picked up that can apply to your own pitch. So wishing everyone well, stay safe, and hopefully some of you will come up for our next session next quarter to share your pitch with us. All right, all the best, everyone.